Let's take a look at AMD. Earnings came out. They reported 58 cents earnings per share. They were expected to have 57 earnings per share, 57 cents earnings per share. Revenue comes in at 5.46 billion versus 5.35 billion expected. So that's a beat on top and bottom line there. Not bad at all. Let's look at what the charts are trying to show us here in the process. So AMD, you got a nice bull flag here that was forming coming into today. It confirmed the pattern for the most part. If we take the earnings reaction out of the equation, it got just above it and then it pulled back just a little bit, leaving traders a little bit on the edge about whether or not it was going to be able to hold that breakout going into tomorrow. Well, with the earnings out now, with the beat, you've got a pretty strong, sizable reaction. It's up about 5-6% off of post-market after hours trading. Some pretty strong volume down here, you can see. Not a bad reaction at all, especially if this holds. You have a nice bull flag breakout to play with. The problem becomes, where do you put the stop loss at? So there's not a lot of good places for the stop loss. The first one that I would say would be the ideal placement would be below the July 24th lows. The problem with that's at 108.55. You're looking at a $15 stop loss on a $120 stock. That's more than 10%. You're talking like 11-12% stop loss there. With the market being as overbought and you're looking at things like the fear greed index being in the extreme greed area, it's very hard to justify taking a 11-12% stop loss, much less in any environment, but in one that it's as stretched as this, to expect that, okay, is there really going to be another 22% of upside for AMD going forward? I don't really quite see that, so that's why I wouldn't take that. Also, in any market, when you're starting to get into these 10, 11, 12, 15% stop losses, you're expecting massive, massive moves to incur. That makes it to where getting a 2-to-1 return on your capital is much, much more difficult. That's why you see me so oftentimes, I'm looking at stop losses that are like 3-4%, because 8% is actually not all that crazy of a return to get on a trade, especially if you can get a quick short-term swing out of that trade. But when you start going for like the 30%, the consistency behind that becomes much more difficult. So with AMD, trying to chase it at 123 is very much a problem. If it can come back down, test this 117 area, that becomes a little bit more manageable. Now you're starting to talk about 5-6% of a stop loss. Now you may say to yourself, well, Ryan, why don't you just raise the stop loss a little bit higher? Don't put it all the way down below the lows from the 24th. That's a valid argument, but really the only other place that I could see myself putting it at would be below 112.35, which would be the lows from yesterday. So that wouldn't be as good of a stop loss either. I think it would be much easier for that to get taken out on any kind of a pullback that's very susceptible, because it just takes it back into this bull flag range where there's not a lot of support at this area. It just happens to be the low from the last couple days. Not really what I would say a support level with heavy conviction there. So at this point, AMD, do I want to chase it at this level? No, I'm not chasing it. So it's very difficult from a reward risk standpoint to justify it. Great after hours price action, but just not something I would want to chase at those levels.